In today's episode, I'm going to share with you my reading list, and we're going to do it chronologically, beginning with the first books I ever read about trading when I started my journey to become a day trader, to the books I've read most recently. Now, these books I'm going to share with you today, this selection, these are some of the books that had the most monumental effect on my career and in my own trading. In fact, I wouldn't be here if it weren't for some of the tidbits I picked up through these books. I'm going to share some of those tidbits with you, and I'm also going to encourage you to read some of these books on your own time. Becoming a successful trader requires equal parts skill, strategy, and discipline. Now, for me, I hit rock bottom early on in my trading days because I didn't have discipline. I struggled with emotion. I struggled with self-control. I would have these days where I would suffer a big loss, and then rather than just walk away, which is what my rules told me to do, I would double down. I would take a second trade, a third trade, a fourth trade. Next thing you know, I'm spiraling out of control. And in one day, I could give back weeks or even months of progress. And it was so emotionally challenging. I just felt like I was at my wit's end. And some of these books helped me deal with understanding what was happening to me in those moments and how to self-correct. All right, so let's begin with the first book that I bought when I decided I wanted to become a trader. The Candlestick Course by Steve Neeson is the first book that I bought. This book was written in the early 2000s, and the reason I bought this book was because at the time, I recognized the importance of understanding how to read candlestick charts, but I really didn't know where to pick up that information. Now, today, you could pick up a lot of that information right here on YouTube in episodes that I've uploaded and shared with you, but it's always nice to have a physical guide to go with that. And so in this book, there's the introduction to candlestick analysis, really talking about the basics of how to use candlesticks, the history of candlesticks, where they came from. You do have quizzes, so it'll quiz you on the knowledge that you're learning. And I think for any beginner trader, this is a must read. If you don't understand how to read candlestick charts, you're going to be left in the dust, because the fact is, as you well know, candlesticks are a universal language of the financial markets. So this book is probably popular not just with traders of stocks or specifically small cap stocks, the area of the market that I focus, but even with traders who trade indices, who trade futures, who trade possibly Forex, cryptocurrency, because you can use candlestick charts on any of those financial instruments. The way I've always thought about candlestick charts is that they are giving buy and sell signals, but most people don't see them. They're there, but you don't see them because you haven't learned the symbolic language of what these individual candlesticks mean. Now, one challenge that I had with this book in particular was that although it's certainly helpful and interesting, I did feel at a certain point, there's a limit to how much you can learn in this format, because this is always showing you what's already happened. Ultimately, the best traders are going to be able to see just this much of a pattern and predict what's going to happen next, because we don't have the full pattern completely unfolded when we're first looking at a chart, right? When we're first looking at a chart, we have this. And now we have to make a prediction, based on just seeing this, of is this stock going to continue higher or is it going to reverse? So when I see something like this small spinning top doji, of course, then the next candle making a new low, that's indicating reversal. We get a fairly big pullback, and then down here we get another doji. That's an indicator that we might get a move back up, and of course we do. So this is helpful in terms of laying a solid foundation in understanding individual candlesticks and how these individual candlesticks come together to form multi-candlestick patterns. So unfortunately, the biggest downside of this book is that it's not super cheap. On the back, let's see if it has a price. This is actually kind of crazy. It retails for $75. $75 US. It's well, these prices are a little outdated. They have some conversions to different currencies, but this, to be honest, it is not a $75 book in value to me. This book, I don't know what I paid for it. I may have even paid that. I don't really know for sure. But this is, if we're just going to be honest, this is not a $75 textbook. it is presented in textbook form, but it's only about it's like 200-page book. So it's if you can find a used copy, and you probably can on Amazon, I would pick one up. It's not in color, but this is one that for me was helpful in laying my foundation of just understanding how to read candlestick charts. And again, for me, in my experience, when I was learning how to trade, there weren't YouTube videos that talked about this type of stuff. That's why I created my YouTube channel in 2013, because I was like, well, I'm going to start putting some stuff out there on YouTube that I think people are looking for. Okay, so that was the first book that I read. The second book right here, Trade Mindfully by Gary Dayton. This is a book that I found incredibly helpful early in my career. Now, this book was written again in the 2000s, maybe it was 2011 or something like that, 2012. I'm not sure the exact date. But in any case, this book talks about the struggle that I went through. I mean, this is like, for those of you that struggle with emotion in your trading, this is a book you have to read. Now, you could get it on audiobook. You don't have to read the actual book. It'd be fine to use the audiobook. But the fact is, this is a book that really is going to help you better understand why you're falling victim to this cycle of emotional impulse control. It talks about a trader's mental blind spots, which we all have. It's talking in this example about someone trading S&P E-mini futures. And so it is a book that would be relatable really to any type of trader. Again, Forex, cryptocurrency, futures, it doesn't matter. But I really think that for those of you that struggle with self-control, this is something that you're going to want to read. Now, I'll tell you that just reading this book will not make you a master of self-control. Becoming a master of self-control requires a very high level of self-awareness, an ability to discipline yourself, and an ability to know in the moment, very objectively, is this a market I should continue to trade in, or should I walk away? Now, for me, my instinct, after I have a loss, my gut instinct is try to make back that loss as quickly as I can. So if I was up 6,000, I lose $2,000 and I'm up only 4,000, I don't feel good. I feel like I've lost something. I have a sense of loss. To alleviate the discomfort that comes with losing something, what do? We try to make it back. Doesn't matter if you lose your wallet, if you lose anything, you need to find it. You feel a sense of discomfort, and that discomfort is going to drive you to an action. The action is an attempt to no longer be in a state of discomfort and to be feeling good again. So once you find your wallet, you feel good again. Once you recover that $2,000 that you lost, you feel good again. So the problem there is that sometimes the right decision is that I need to walk away because the market is not in this moment suitable for my strategy. The market is too choppy. We're not seeing good resolution. And that requires an ability to look at the market, not based on where you sit in your own P&L on the day, but based really on how is the market performing? Are stocks going up? Are stocks dropping? And to have that honest reflection. And the problem is that in the moments of maximum emotion, the part of our brain that is doing that thought process is not the most advanced or intellectual part of our brain. That emotional response is coming from a very reptilian part of our brain. And when that part is in control, we call it emotional hijack. Now, there's some books that I will share with you that I read a little bit later in my career that helped me better understand this phenomenon and find better ways to deal with it. But the fact is, this was a really important book for me early in my career, and it got me started on this mission to become a more mindful trader, to be more zen in my trading, to be able to be a real master of discipline. And I try to lead by example with that every day while I'm trading, of course, at Warrior Trading. Okay, so first book was Candlestick Course by Steve Neeson. Second book was Trade Mindfully. Third book, how did this get here? This is an original proof of my book. How to Day Trade, The Plain Truth. Well, that's funny. I don't know how this got there. We'll put this aside. It's a great book, by the way. Okay, so we have The Intelligent Investor. At a certain point in my career, when I was struggling with sort of impulse control, and I was struggling as a day trader, I started to think, maybe I'm making this too complicated. Well, look at these big investors, the Warren Buffetts, and all these people who have been so successful. They were not day trading, right? They're investing, and they're making billions of dollars. So I thought, all right, maybe I should get a better handle on at least understanding how they trade. And Warren Buffett said this is by far the best book on investing ever written by Benjamin Graham. So this book was written, for what it's worth, quite a long time ago. The preface is written by Warren Buffett. And let's see, this was written originally, well, Benjamin Graham lived from 1894 to 1976. It was written in 1973. So this really is a very old book, but it is a good read. I would say that one of the things that I always encourage when I'm teaching my classes and when I'm talking to people who are aspiring traders is to learn as much as you can about the market at large. Even if learning about how Warren Buffett is investing isn't going to necessarily translate to making more money tomorrow as a day trader, it's part of having a good holistic understanding of how the market works. And I think ultimately, and I actually saw an article recently that talked about how courses on financial literacy directly result in people making more money over the course of their career because they make better financial decisions. And that's why schools and colleges are trying to make it a requirement to have financial literacy as part of the education. Now, that wasn't the case when I was going to school, and it may not still be the case for many of you today. And it seems like a crime that people could graduate from high school or college without understanding the financial systems that they could certainly benefit from. It seems the people that understand the financial systems the best are the people who are in a very elite group, and that's unfair. So I read The Intelligent Investor in the hopes of maybe becoming better at picking stocks for long-term investing. This was also during a period when I was actively trading stocks like Apple, every single day. And then over the course of a year, I would have lost money, but I'd look at Apple and I'd be like, well, geez, this stock actually went up 10% this year. I would have done better if I just bought it, held it, and walked away. Instead, I overtraded and I lost money. And that made me feel kind of stupid. However, I will say for those of you having the same thought process, that if you start with a very small account, like $1,000 or $2,500, yes, you could put the whole thing in Apple. And if Apple goes up 10% in 1 year, you're up $250 on a $2,500 account. It's not meaningful. In fact, last year, I probably beat most hedge funds in terms of performance, but I did that because I started with a relatively small account and I made as much money as I did in a small account. So I probably made 50%, maybe 100% on a small account. Most hedge funds won't do that. In fact, Warren Buffett recently said the days of Berkshire Hathaway having big percentage returns are over, because once you get to a certain amount of money, you cannot move in and out of a stock that's going to go up 50% in one day with $1 billion. You can't. It's not possible. These are companies that are valued at only maybe 15, 20 million. So you couldn't put $1 billion. You'd be buying the whole company plus 20 others just like it. There's just a limit to scalability. So I think for most day traders, what I set as my goal is with a relatively small account to grow it as quickly as I can, and then all the excess profits. So my bucket for day trading generally has been, I'll keep like $100,000 in my account, maybe as low as 30 or 40,000. And of course, I've done small account challenges where I've had less. But usually, once I get over 100,000, I'll take that profit out and I'll then put it into, a Berkshire Hathaway type of stock where I can buy and hold and just let it work. But I can't do that with $10,000 or $5,000 because the returns aren't enough for it to be a full-time job for me. So I have to actively trade with a small account, and then the excess profit I roll over to lower risk buckets of investment, like large caps or indices and things like that. Okay, so second book, or third book was The Intelligent Investor. And then Peter Lynch, he was the manager of the Magellan Fund at Fidelity, incredibly skilled investor, very well known, but specifically in the 90s and early 2000s. So this is a book that was written, again, this was written a while ago. This talks about his investing in the 80s and 90s. Let's see, the date of this book was copyright 1989. So, again, this is a book on investing, and I found this to be really interesting for me in helping me better understand the mechanics of the market, what big investors would be attracted to, what they'd be looking for. And although maybe you'd think that doesn't translate to making more money tomorrow, it's again part of that better understanding of the market in general. However, after reading those two books, I couldn't help but feel a little bit depressed because I thought, well, I don't have the money to invest like these guys. I don't think I'll have the money to do that for a long time. Their strategy doesn't really work for a small trader. And so I read this book, The Happiness Advantage, to help get myself back into a good mood. This was written by Sean Acor, and he's a very interesting fellow who's written a number of books. But The Happiness Advantage, how a positive brain fuels success in work and life. And it's not just that, kind of hocus pocus, think happy and you'll make money. It's really talking about the reality that if you look at things, you can choose to look at things through the cup half full or the cup half empty. And there are so many people out there that have incredibly fortunate lives and are very, very gifted, but are constantly looking at the cup half empty. And I struggled with that myself in my early years when I hit rock bottom. And then even as I started to turn the corner, just dealing with this frustration that I needed to do more and what I was doing wasn't enough, and just feeling really frustrated with my performance, that I wasn't doing as well as I wanted to. Now, Sean grew up in Texas and got accepted into Harvard for his undergraduate, and so made this huge move from Texas to Harvard. And he said when he was studying at Harvard, something like 85-90% of the students there are miserable. They're dealing with panic attacks, anxiety, depression. They're just like so maxed out because they're in this, they're in this environment where there's a tremendous amount of pressure on each individual to perform. It's incredibly competitive. And the stock market is not necessarily different from that. The stock market is very, very competitive, and the stock market is a place where it's not about success among the group. It's a very individualistic type of career. You succeed on your own merits. So this is a book that helped me with getting into a better headspace, and this is also something that I think about in trading. I know not every day is going to be a record-breaking green day. In fact, only one day ever, in my career at this point has been a record-breaking green day. And only one day has been a record-breaking red day. And everything else is just in between. And sometimes when I have a day where I give back 30% off the top, or I give back half of my profit, I was up 10,000, I lose half of it in one trade, I'm up only $5,000. It's easy to look at the glass as half empty. I feel frustrated, I feel disappointed, I feel angry with myself, and there's a tendency in that moment to go back to some of those old habits of jumping in anything that's moving to try to desperately recoup that loss. And the better I've gotten at being able to say, you know what, I gave back a little bit today, but you know what, I'm green on the day, I'm green on the week, I'm green on the month. Big picture, life is good. Or big picture, I'm red right now, but I'm building my knowledge, I'm gaining experience, and this is part of the process. That has helped me keep my emotions lower. So when I'm faced with these moments of frustration, those emotions don't get as big. Okay, so happiness advantage. So we'll put these aside over here for now. Now this is a book that is kind of interesting. Thinking Fast and Slow. I, on the one hand, like it. It's a New York Times bestseller. On the other hand, he's very critical of the stock market and traders in general, almost to the point of just saying day traders and the illusion of stock picking, that traders are just complete degenerate gamblers, which I didn't really appreciate. So I was able to set aside his clear bias against active trading and take value out of the book, which is, again, this is a book about thinking. This is a book about the way we look at the world, the way we look at challenges in our life, the way we make decisions. And something with trading that I think is very interesting is the fact that we are thinking fast and slow at the same time. Some of my trades they're almost impulsive. And I say impulsive, and I mean it in the sense intuitive. It's intuition. And when you're in a moment of intuition, you're not thinking. Well, imagine someone who's on a surfboard surfing. They're not thinking in their conscious mind, I need to shift my weight just 7 millimeters to the left to maintain my balance. Balance becomes intuitive. It becomes, part of this like parasympathetic kind of just, it's like it's happening. You don't have to tell yourself to breathe. You're just breathing, right? And trading for me is like that. I've gotten to a point in my trading where when I see something, I'm pressing the buy button. Like it's muscle memory. It's just happening. And I'm kind of on autopilot. However, there are moments where I need to take the controls away from autopilot, because autopilot can, in the right conditions, send me into these snowball modes. And so I need to be able to know when I have to intervene to take myself off autopilot, and when I have to sort of slow down and ask myself, all right, right now, are these good trades to be making? Something that a lot of traders struggle with is quantifying trades as being good or bad based on just the outcome. But what you learn over a long period of trading is that, in fact, you can take terrible trades and make money, and you can make great trades and lose money, because the market will give you inconsistent feedback. Now, long term, over the big picture, if you have a strategy that is proven, like mine is, that you've got a solid track record behind, then as long as you're following the rules of the strategy, you'll come out ahead. But in short periods of time, you can have a series of 4 or 5 losses in a row, and you're still following all the rules of your strategy. Or you could start breaking all your rules, and you could start making money. And this is what some traders will do. And they'll jump from strategy to strategy to strategy, giving up as soon as one strategy starts producing losses, and they abandon it, and then they switch to something else. So that's obviously to be discouraged. What's important is to be able to understand this is a strategy that I'm following, but in these moments, I have to be able to make that objective analysis of, is this a market that I should be leaning into being aggressive, or easing off the throttle and slowing down? Okay, so this was a great book. Then a couple years ago, I listened to this book on audio tape when I was on a sailboat off the coast of New England, and I listened to the whole book while I was sailing. It was just me and the ocean and this book, and I found this to be fascinating. This opened sort of a world that I really didn't fully understand. It talks about the rise of machine traders and the rigging of the U.S. stock market. This is something that began really with the advent of electronic trading in the late 80s and early 90s, where traders, both traders and exchanges were sort of fighting with one another, and everyone's trying to make money and cut in front of the other trader. And this still happens in a very real way today. It can make you a little cynical, and it can make you realize that as a little guy, but this helped me kind of better understand about staying in my lane and trading what I know, and leaving the areas to the big guys that I'll never have an edge in. I'll never be one of the reasons I feel like I'll never be one of these big investors is because they're so well connected. The Jim Cramers who know all the CEOs. I mean, they have an advantage that I'll never have, right? It's just impossible for me to have that advantage. So anyways, I think this is a great book to read. And then this book gave a recommendation for this book right here, Secrets of the So's Bandits. So this is a book that's, I'm pretty sure it's out of print. It's hard to find, but these two books can go hand in hand. And the original electronic trader reveals his battle-tested trading techniques. This is not going to be a book that is necessarily going to give you strategy that you can apply to today's market. It's more of, it's historical, but it is very interesting and worth a read. So these two books I found very interesting. And then this was a book that many people had recommended over the years. It's called The Little Book of Market Wizards, Lessons from the Greatest Traders. Again, this sort of takes some liberty with who would be considered a trader. It's talking about people who run these quantitative analysis trading firms who make incredible amounts of money. John Blender, a brilliant options trader who managed money for George Soros, Quantum Fund. So, in any case, it's a very light read. It's a very short book. It's a book that you could bring on an airplane, no big deal. And this also is quoting the book Reminiscences of a Stock Operator, which is a book that's also a good read. I could have added that to the list, but I didn't. So, I think that this is something that many of you would probably find some value in. It's not been as meaningful a book to me as most of the others. It may be one of the lowest on the list, but still interesting nonetheless. Okay, now we're going to get into a book that I found incredibly helpful. This is a book that I read about a year and a half ago. It's called Quit by Annie Duke. You've probably heard me talk about it in different episodes, recaps, and things like that. Got some water spilled on it, but I listened to it on audiobook, and then I bought the physical book to have a copy of it. So let's see. This book was written in 2022, so it's a relatively new book, and I just found this to be fascinating. So Annie Duke is a professional poker player, and she writes the book about the power of knowing when to walk away. And I thought, what? Could there be a better book for an active day trader to read? Knowing when to walk away. I mean, this is like, knowing when to walk away is huge. She tells an interesting story about taxi drivers in New York City and a study that was done of them. And taxi drivers in New York City, a lot of taxi drivers are renting their taxi for a 12-hour shift from a company that owns a bunch of these taxis. And so they're paying their rent for each day that they're paid for the 12-hour shift. Now, she said that the tendency is that as soon as they hit their goal of how much they want to make that day, enough to cover the rent that they have to pay for the car, plus fuel, and then a profit for themselves, they walk away. And so for some drivers, they'll walk away after a couple hours of good fares, and they'll leave the remaining 8 or 9 hours on the clock. They'll just put the car back. They're done. But on a cold day, when there's not as many fares, they'll grind out that full 12 hours until they've paid the rent of the vehicle, and then they've made a little bit of their profit, or maybe they don't quite get there. And they did an analysis where they said, I don't remember what the percentage was, but they would make, it was like 15 or 18% more money if on the days it was hot, they kept picking up fares, and on the days it was cold, they walked away early, even if they didn't hit their profit target. Now, I think the thing that's unfortunate is that a lot of the people that are in the situation of driving these taxi cabs don't have a lot of money. So the reason they work until they hit the rent on a slow day is because they don't have the money to pay the rent for the car for that 12-hour shift if they don't make it on that day. So they have to keep pushing. And then why they don't work harder on a day when it's really hot is a bit of a mystery to me. I don't know if that's a risk analysis of like, well, whenever you're driving, you have the risk of having an accident. So why even take the risk of, having something bad happen? I'll just take my profit and walk away. I don't know if there's some additional fee you pay for mileage or something like that. But in any case, when it comes to trading, the way I tied this back was that there are days where I could trade from the second I sit down for 12 hours and I won't get much for it. And then there's other days where I'm going to hit my daily goal in the first 30 minutes. Should I walk away after I hit that daily goal? That's a tough call. To me, the answer is no. Because on a day where I hit my daily goal in 30 minutes, who knows what could happen if I trade for 4, 5, 6 hours? That could be a really big green day. And those are the days where I have to dig in. I have to lean in. I have to dig deep and push as hard as I can and try to capitalize as much as I can on this small window of opportunity. In fact, I would wager that about 80% of my profits come from about 20% of my trading days each year. So if it's one of those days where the market is hot, I got to dig deep. And if it's cold, then that's a day where if I start running into resistance, I start giving back profit, maybe it's time just to step back. As a trader, it is so hard to walk away when you're in the red. You never want to walk away in the red. You always want to walk away in the green. But one of the things that I've come to kind of understand is that sometimes I have to think of myself as weathering the storm, seeking shelter. Like there's a big storm going on right now, and it's about survival. We're no longer talking about like how much money can I make? It's survive. Survive to thrive, live to trade another day. And so if I manage to only get beaten up a little bit, I'm grateful for that. If I only lose a little bit on a cold day, hey, that's great. No reason to push it. Just survive and come back and then push again when it's hot. Now, it's easier to do that when you did push during the last hot cycle because you'll have some reserves built up from when it was hot. And then you feel like you're really going to do well. This is that kind of Great Depression mentality of like, putting a little away for a rainy day. And so anyways, I'm a big advocate of Quit by Annie Duke. So definitely recommend reading that one. What in the world? This crazy. This was in my reading list twice. How to Day Trade the Plain Truth by Ross Cameron. This is a bestseller on Amazon. If you guys haven't checked it out, I encourage you to do it. I began my career as a trader. This was me in middle school. So probably like 13 years old, 14 years old. And that was when I started my career. So I wrote this book really to be what I thought would be a great introduction to trading. This is not meant to be a textbook. It's not trying to teach you everything there is to know about trading, but it's to introduce you and to get you started. If you want to keep reading, then you should. Okay. So now this is actually Annie Duke's first book, Thinking in Bets, but I read it second. This was written in 2018. I read Quit first because this just resonated with me more. And anyways, Thinking in Bets I read second. But I did find it to be really interesting. So Thinking in Bets talks about the challenge that she faced as a poker player of making decisions when you don't have all the information, right? You don't know what cards are going to come next. When trading, you don't know what's going to happen next. You can have a hunch, you can have a theory, and it can be very much based on educated intuition, but you don't know. So you have to make some presumptions with what you do know. So you take everything you know, all of the knowledge you have about statistics and the strategies that work and the time of the day it is and the price of stock you're looking at and everything else, and you take all of that and then you make your decision. So thinking in terms of bets, it helps you realize that in a way, every decision you make is a bit of an educated guess, a gamble, if you want to call it a gamble, a bet. And that's certainly true, obviously, when you're literally gambling or when you're trading the markets and you're taking these, these trades. It's very obvious there. But when you think on a bigger scale about how many other decisions in life are similar, it, for me, helped me better understand the decision-making process that I make when I'm trading. And she talks a lot about resulting, which is the process of basically being very critical of your decision based purely on the outcome. So, you took a trade, you took a really big loss, and then beating yourself up because you lost. And it's like, that's the hindsight being 20/20. You can always be critical of things in hindsight. Oh, I coulda, woulda, shoulda. but it doesn't really do us any good. And that starts to actually get into a loop of emotional thinking. It's not very high level of intelligence to just constantly be critiquing what you could have done differently, coulda, woulda, shoulda. There's only so much value in that. So the question is, in the moment that you made the decision, was it a solid decision? Regardless of the outcome, let's just look at the decision to take that trade. Based on what you had for information in that moment, was it a good decision? And if the answer is yes, then the outcome is what it is. Now, if part of that is no, well, the decision was good, but I took 10,000 shares, I only should have taken 3,000, then there's an opportunity to take a lesson from that loss. And that's very valuable. And it's equally valuable on a winning trade. You could have a winning trade and you could say, oh, that was a great trade. But was it really? Did you take way too much risk? Was it borderline a gamble? Was it really a good trade? Just because it's a winner doesn't make it a good trade. So this helped me think more critically about my trades. And by thinking more critically about your trades, you get more focused on what really were my good trades that I need to focus on taking more of. And what were some of my bad trades that are showing me things in my trading that I need to stop doing? Because ultimately, if you can lean in and double down on the things that are working, you will make more money. If you can drop and cut entirely the stocks that are contributing to some of your biggest losses, you will lose less, which means you're making more. So for some traders, the difference between success and failure can be a very fine line. Just simply cutting out one of the strategies that's costing you some of the biggest losses and leaning in on one of the ones that's giving you bigger winners, that can be the difference between success and failure. So I hope you guys enjoyed going through my recommended reading list. I do hope you check out a copy of my book, How to Day Trade, The Plain Truth. And as always, if you enjoyed this episode, make sure you hit that thumbs up and you subscribe to the channel. And I'll see you for the next one real soon. And hey, YouTube thinks because you watched this whole episode that you might really enjoy this one that I'm going to post right here. So check out this episode next.